Most people get chart patterns completely wrong. They memorize the shape, ignore the context, and wonder why they keep losing money on setups that looked perfect. Here's the truth. Chart patterns are not crystal balls. They are probability engines. They tell you where the market has statistically tended to go after a specific sequence of price behavior. And the 4 patterns I'm about to walk you through are the highest probability repeating setups across every crypto market, every time frame, every cycle. Start with the head and shoulders. This one has been reliable for over a century, and it shows up constantly in crypto. You get a left shoulder, price rallies, pulls back, then a higher high, the head, then a lower high, the right shoulder. The moment price breaks the neckline, the pattern is confirmed. Bitcoin did a textbook head and shoulders on the 4-hour chart in early 2024, right before a sharp leg down. But here's what nobody tells you: most traders enter the second they see the shape forming. The professionals wait for the neckline break with volume. That single habit separates the winners from the people posting losses on Reddit. Next, triangles. Symmetrical, ascending, descending, they all do the same thing: they compress energy. Price is coiling tighter and tighter. Buyers and sellers are fighting to a standstill, and eventually one side breaks. Ascending triangles, where the highs are flat but the lows are rising, historically resolve to the upside more often than not. Ethereum formed a clean ascending triangle for 3 weeks in late 2023 before a 30% breakout. The volume contraction during the coil, followed by a volume explosion on the break, that is your confirmation signal. Double tops and double bottoms are simpler, and that's why traders underestimate them. Price tests the same level twice, can't break through, and reverses hard. The double bottom in particular is one of the highest conviction reversal signals in crypto because it shows that sellers tried twice to push lower and failed both times. The neckline break is everything. Miss that, and you're just guessing. Then there are flags. A sharp directional move, a brief period of tight consolidation where price drifts slightly against the trend, then continuation. Flags are momentum patterns. They tell you the trend is so strong that even the pullback is controlled and shallow. When you see a flag forming after a strong breakout, the market is basically telling you the buyers are not running, they're resting. The traders who consistently profit from these patterns do one thing differently. They wait, they confirm, and they size consistently every single time without letting emotion change the plan. Discipline is the pattern that matters most, and Vishmaster automates exactly this at vishmaster.live.